uh, and talk about the update in the metal space. Remember, all of this week, the metal index and all of its constituents have been under a little bit of pressure because of what was announced over the weekend. You had the Finance Ministry on Saturday that notified export duty on 11 iron and steel intermediaries, and at the same time, it lowered the import duty on 3 key raw materials for steel production. Ostensibly, the street looking at it and saying that the government wants domestic steel mills to produce for India primarily over and above what is being exported. Now, let's understand what the government was thinking. Joining us now to tell you that is Sanjay Kumar Singh, the Steel Secretary. Thank you, sir, for taking the time. Let's start with the most important question, which is what was the rationale behind levying the duty?
To be able to appreciate this, well, let me elaborate this issue. We have to understand the steel sector. Steel sector is large, complex, and with many kind of stakeholders. There are major steel players, major producers, smaller producers, and also specialty steel makers who are making value-added steel. Then on the other side, you have the consumers. Consumers are, you may say, I mean, the citizens are consumers, people who are making their houses, they are consumers, infrastructure providers are consumers, and then also smaller steel makers are the consumers of the steel produced by the larger players. So their needs and requirements are different, and they are to be addressed, I mean, through diverse mechanisms. I mean, this particular notification which has been issued by the government, it takes care, addresses all their requirements. Let me further elaborate. For instance, major steel producers' demand was that raw material cost is high, raw material prices are high. So that has been addressed through nil duty on import of coking coal. Coking coal in last couple of months had gone up manifold. Similarly, alloy steel makers, ferronickel has been provided nil duty, and similarly, if we can say small steel makers, I mean they required pallets, they required steel, so steel was growing at a very rapid. I mean, I'm talking about the prices. I mean, it was going up like I mean in last if I can say couple of months, it increased roughly 40 to 50%. I'll just narrate an example to you. Somebody met me who's constructing a house. He said when he started constructing the house, the steel price was 45,000 a ton, and it nearly doubled. So this steel price was impacting consumers, citizens, infrastructure players, and everybody. So to take care of, I'll say, raw material, to take care of the steel being required by steel makers, infrastructure providers, the prices, the way they were moving, I mean, this issue was required to be really addressed.
Okay, so the measures are aimed at controlling both the input costs as well as making steel available here in India. What is the impact that you see on the prices of both iron ore and steel?
You see that prices by and large are determined by demand and supply. Right now, country is at a level where we won't have to consume more steel in terms of getting into circular economy. When we produce more, we consume more. We will produce more if we have in-house raw material available with us, and we produce more steel. We consume more steel. We generate more scrap, and through which we get into circular economy, so that over time our dependence on iron ore and raw material of this kind is reduced, and we become environment friendly. So basically, what we are looking at is that there is adequate supply of steel within the country. Right now, steel consumption is at the lowest, when it's 75 kilos per capita. I mean, to be able to get into circular economy, we need, I mean, in a short and medium term, to increase it to at least double it, if I can say that. So this is going to definitely address this issue of high price rises, and it's going to.
I think a lot of people are wondering, Mr. Singh, whether this is a short-term move. Is it something that is going to look at the next 3 or 4 months, or is this more long-term in nature, the change in the duty structure?
I mean, it all will depend on the impact. If impact is such that it reduces the prices, I mean, then accordingly it would be addressed.
But we understand that steel companies have written a letter to you pleading their case. Any chance of a rollback of the duties, or even a middle ground of sorts?
When the prices have gone up, citizens are being hit. I mean, as I mentioned, I mean, prices have roughly doubled, and that is about the prices of steel. And secondly, about the coking coal. Coking coal prices in last 6 months, it went up manifold. So I mean, it also, this entire notification also covers import duty on coking coal and ferroalloy as well. So it is in the interest of everybody. It's in the interest of the larger player, smaller player, citizen, infrastructure provider, and more so we have to look at it from also this angle. Look at this year's budget. This year's budget is towards making India Atmanirbhar in all kind of specialty steel, and has given a big push to infrastructure sector. And when that money is available, we need steel to really complete those kind of projects.
Okay, so that's a fair point. But for steel makers, and particularly the large ones, there was an opportunity that was being presented in the export market because of the reduction of production from Russia. That is now going to see a little bit of a dampener because of the export duty increase. What are your thoughts here?
So much of demand in the country. Last 2 years were bad in terms of infrastructure and the consumption, and we need to, as I mentioned, we need to in short and medium term, we need to increase our consumption. For that, production within the country is required to be increased, and so that we can consume more. All sectors are requiring steel within the country. So we ourselves domestically, I mean, have capacity to consume much more than what we are producing.
But okay, so there are some commentators that are pointing to the fact that domestic demand might not be enough to absorb the excess supply. What do you have to say about that?
In fact, demand and the pricing level, if it is adequate, I mean, it will absorb whatever steel is produced.
Do you anticipate a change in the prices in the near term? Do you anticipate that domestic steel prices will fall in the near term? And do you expect a sharp drop in the prices led by the increase in supply?
In fact, definitely. I mean, all these things are linked. When the prices come down, because prices have been historically at the highest level of the steel prices, and that also compressed our demand. So prices also, that is the kind of impact prices have. If they're very, very high, I mean, they also compress the demand. So if the prices normalize, demand, there is need for steel, there is demand for steel in all sectors, the demand will go up. So this is going to be, I mean, things are going to be in balance, and they would normalize.
Mr. Singh, it's a known fact that India is a big player in the steel market globally, and quite a few of the large players will have had plans on capex. Do you anticipate that this disincentive to export will affect those plans?
The capex is on the basis of how much is the demand. The demand, if we are able to meet internally, and I see that we have huge demand within the country which we need to really meet, and for that the pricing also has to be at the level which is in the interest of industry, in the interest of consumers, everybody. So what is going to be that equilibrium? So we have to attain that equilibrium, and definitely when there is need for more steel, the capex would be required, and capex industry would put in money.
People from the industry have pointed out that they have contracts that run into several months and delivery takes place over those months. They're thinking that perhaps the government of India should have given about 3 months before the imposition of the export duty. Is that something that you're going to reconsider at some point?
Such kind of things have not come to us. I mean, let's see whenever they come, we'll address that.
Okay. Would you then consider giving some leeway for export orders that have already been signed?
Let individual cases come to us. We'll accordingly see them.
Mr. Singh, thank you so much for taking the time for speaking to ET Now. Pleasure speaking with you. All right. On that note, we have to slip into a very quick commercial break.